This is the FFR Trading Market Minute. And again, this is the SPY on a daily candlestick chart. And last Thursday, we had made our bottom here. This was our third target. That target was from this demand zone back here that price rallied, came back to, and then took off. And so we did hit that. And at the time I said we have some, we'll call it micro bullish divergence. We had lower low in price, but the oscillator here was below 5. It was above 5 here when it made the bottom. And so that's where the rally ensued. And we were here last week. This green candle here is where we closed on Thursday. And I said we should retest the 200 period, which is still rising here. And that's kind of our bull bear line. Well, we got the news about the ceasefire. The market had the huge gap up here and retraced about 66% of this entire down move from the highs. And that is the next kind of level. We got to it. We haven't closed above it, but if we start closing above that 66% retracement here, then the odds are we will not see these lows again, would actually see a new all-time high, or the probabilities that we'll see a new all-time high are much greater. Right? It hasn't happened yet, and we do have this big gap below the market. All right, so we basically just gapped above the 200-day. We'll see with this 2-week ceasefire. Obviously, a lot of volatility, a lot of news that's unplanned is going to hit the wires here. And we'll see. The question is, do we retrace and fill this gap before we make the new all-time highs? I think if we do close above this 66% retracement from the lows, if we do close above that, then I think the probabilities are much greater that we'll see the new all-time highs before this gap fills. If they're not able to get above here and hold above, all right, that level, then chances are I think we do at least test the 200, if not fill the entire gap here. So I'm just going to put a line where that gap fill is going to be, because that will be a downside target below the 200-day. All right, you can see we are overextended here on the RSI. Doesn't mean we can't go higher here. But just be careful if you did catch any of this long here, that we are starting to get overextended here. Some of the economic data scheduled for next week. Existing home sales kind of kicks things off on Monday. Tuesday, the big producer price index. Wednesday, you've got the Fed's beige book, and Thursday's initial jobless claims. Hope that helps. Have a great rest of your trading week. We'll see you back next week in the FFR Trading Market Minute.